Okay, welcome to the Wall Street crossover show, sponsored by Admiral Markets and with their senior market commentator, Darren Sinden. Are you a senior market commentator or just a market commentator?
Certainly senior in years, Zach.
Okay, so, well, and obviously an eminence and prestige.
Oh, thank you very much, too.
Right. Just before we came on, you were discussing, I think, the German finance minister's comments regarding the latest twist in the Greek tragedy.
Yeah, Mr. Schäuble seems to have poo-pooed the Greek parliamentary vote and has said apparently that an exit for Greece would still be the best medicine. So it would be interesting to see how the proposed plan fares in the German legislature when it's voted on. So which I think is Friday. So
yes, but I think we've learned from this saga that the votes are irrelevant as long as they only come up with one. Well, they have to come up with one conclusion.
Yes, and there is a chance of qualified majority voting as well in the total vote amongst the 6 nations that are going to put it to their individual parliaments. I suspect it will go through, but there'll probably be quite a bit of mewling and kicking and screaming before it's actually done and dusted. Right,
well, that sounds really healthy. In the meantime, the markets are up, or the German market's up actually, but we'll go on to that a bit later.
Yes.
Data released over the European session.
Okay, well, the latest in the sort of seemingly never-endless round of Eurozone inflation figures. This is CPI for the Eurozone as a whole, year-on-year number we look at here, and this is June 15 versus June 14, so modest inflation here, 0.02% plus. That's what the reading was, plus 0.02% the forecast, and the prior read equally plus 0.2%. So yeah, flatlining but modest inflation in the Eurozone, if you believe that figure.
Yep.
Over the last 12 months. And then we had the trade balance numbers for May. These are not seasonally adjusted, so they're subject potentially to revision going forward. But the thing that struck my eye was that, yes, it was a surplus, 18.8 billion euros, but that was significantly lower than the prior read in April of 24.9 billion. So it's far from a smooth upward curve in terms of the retrenchment, shall we say, of the Eurozone economy. And I don't know what Mr. Trichet thinks of it, and what Mario Draghi will say this afternoon, but I should think current and former central bankers must be wondering where they've gone wrong. And then, speaking of where people have gone wrong, bridge financing for Greece gets provisional approval. 7 billion euros apparently has been nominated to tide them over. The only thing is, nobody seems to know where it's going to come from. So it's been agreed in principle, but as Mark Twain said, never let the truth stand in the way of a good story. But I'm sure they'll find it from somewhere.
Right.
And just before we came on air, the ECB interest rate decision. No surprise that rates weren't changed. Press conference at 13:30. So Mario Draghi and his colleagues will be up on the stage. I'm sure they'll be asked about the bridge financing. Not that it's necessarily anything to do directly with the ECB.
Is it bridge financing, or is it a bridge on top of another bridge?
Yeah, I mean, yeah, you can you can look at it in all sorts of ways. It's just pouring more good money after bad, basically.
Okay.
But there we are. So all eyes will be on Mario Draghi, as I say, in about 25 minutes' time.